The real estate space has been on fire of late as well, right? I mean, most of these stocks have done well. The property market is booming. So, Deven, just stay on. We'll come to you in a bit because we have a gentleman who tracks the space very closely. The ASK Property Fund has closed its latest fund with a corpus of 1,500 crores. This is ASK Property's sixth real estate fund and will concentrate on the top 5 cities and primarily invest in mid and affordable residential development projects. Amit Bhagat, the Managing Director and Chief Executive Officer at ASK Property Fund, joins us now to talk about this. Amit, thanks a lot for joining in. Tell us a little bit about what the prognosis is in the mid and affordable segment. What kind of growth are we looking at? Is there, further price appreciation that you're expecting to see?
Good morning, Manisha, and thank you for having me here. I think after a 5-year lull, real estate has seen its true worth because we have all realized that we need a bigger house and we need a house for sure. I think the pent-up demand and the 5-year lull has led to the actual demand coming in. And I'll divide it into 2 parts. People who are buying land and people who are buying apartments. In apartments, it makes no sense to be an investor because you pay 5% GST and 5 to 6% stamp duty. So it is a real end user demand which is coming to the apartment segment. Now, if you look at the capital available to the sector, the capital has been depleting and because after the NBFC debacle, and the money available to the sector for growth has been very limited. Because of that, the under construction unsold inventory in every city from 29 and 36 and 47 months has fallen to 8, 12 or 15 months. Now that explains the reason for the price increase in the last 1 year. Because end user came back during COVID because of low interest rates and the actual pent-up demand. And there was an under construction unsold inventory which was declining. And that led to the price increase in the segment. So for the first time, we are actually very bullish on the sector because we feel that this end user demand is a sustained demand which will stay for a longer period because the high interest rates in the home loans are transient and these interest rates will start coming down as inflation cools down and the end user demand will continue because we are a 140 crore people. Yeah.
Amit, hi, good morning. So, 2 questions. One, where will bulk of this money go? Will you sort of give it to sort of tie up with builders? Will you sort of look at land? Which cities are priority for you? We have the list of the cities which you like, but where exactly is the maximum room for appreciation now? I think our viewers would be interested in that. Your view on that. So, go on.
So I'll divide it into 2 parts. First, the appreciation part. I will request end users not to be an investor in this segment even now, because as I explained to you, there's a 5% GST and a 6% stamp duty. So you become day one 11% negative and rental yields are 2 to 3%. But having said that, when it comes to our fund, we focus on Mumbai, Pune, Bangalore, Chennai and NCR. We remain in cities and we don't go to extended suburbs. So we don't go outside the city. We focus on affordable and mid-segment housing. And we primarily give money to replace the earlier lender or for working capital for completing the project. So we do a financial closure of the project. These are all residential mid-segment projects which are focused in growth markets, which are closer to job markets, especially white-collar job creation. And we ensure that the project is completed. And that is our endeavor. And we only focus on developers who are customer-centric and focused on completing the projects as committed to the investors or to the buyers.
We understand the macros of 140 crore people looking to buy houses and COVID and all of that. But the near term does not look very promising. The reason why I say this is, one, because interest rates are high. Secondly, investments in property looks like it has been front-ended, especially because of the announcements that were made in the budget. So the last quarter was good. And the third part is that, we aren't seeing a lot of jobs in the startup space or the job market that you speak about. And that's largely because of the funding winter that we've seen. So would it then not make sense to deploy money later than just now?
So I think there is a gestation period. Whenever you deploy money, the project starts yielding returns 1 year after deployment or investment. That is one part. Coming back to the high interest rates, I think the high interest rates, as I mentioned, will be transient. When inflation cools down, the interest rates will go down. These are typically 20-year mortgages, and 20-year mortgages does not impact if the interest rates are high for a year or two. Yes, it is a barrier for an affordable housing, where the end user in the affordable housing will definitely look at his EMI and the cost of paying to the lender, and he may defer his purchase a little bit. Having said that, if you look at who buys a dwelling unit for end use, when his job is stable and he can see his income for 20 years. So if the funding winter has dried up for startups, it does not impact us, because employees of startups do not buy till their job is stabilized.
Got it. I mean, I get, we get that. Just one point, right? I mean, someone in a city like Mumbai bought an apartment in 2012, 2013. It took them 10 years for prices to come back to their purchase price. I mean, if you're living in the house, they say you should never look at what the price is. But I mean, it's a good, it's wealth effect, right? I mean, to see the property value go up. We are now back above the 2013, 2012 peak in cities like Mumbai. Do you think from here prices will appreciate? I mean, just your view. I get the disclaimer that when you're buying a property you should buy it for use and not speculation. But just wanted your view.
So if you look at Mumbai data, I think the under construction unsold inventory is around 12 months. And if the buyers will always come back to the market, whether it is equity or real estate, when there is a fear of missing out. So if quality under construction unsold inventory is limited, although the launches will subsequently increase, because till last year there was
so yes or no, Amit? We're short on time. Yes or no? You think prices will be higher?
End user has to buy because prices will become higher more than the inflation.
Okay. All right. We'll have a detailed chat later. Thank you very much for coming on a quick chat. Good luck with deployment of the funds. Appreciate it very much. We'll take a quick break here. Anuj will be with us for the quick